my beginner's guide on market structure. This is the third time I've had to record this. The first time the microphone wasn't on, the second time my phone rang and completely killed my train of thought. So the first thing you need to understand is we're going to keep it very basic today. Price can do one of two things. Price can move up, which is what we call bullish structure, and price can move down. Now, before one of you smart asses wants to comment, oh, price can move sideways. Oh, price can't really move sideways. When price moves sideways, it just moves up and down in a very small range. This is what we would call bullish price action. This is what we would call bearish price action. And this is what we'd call consolidation. When price moves up, it moves up in a very specific way. It creates a series of, let's do it in a different color. Let's do it in green. It creates a series of higher highs and higher lows. Now, the hallmarks of a bullish trend is that each high is higher than the previous one, and each low is higher than the previous one. So high, higher high, higher high, low, higher high, higher low, higher low. Vice versa for a bearish trend now. Price makes a series of lower lows and lower highs. This low here is this low here is lower than this low here is lower than this low, this high here is lower than this high here is lower than this high, and vice versa. When we are looking to trade, if we're looking to get into buy positions, it makes sense for us to enter at relative lows, and exit at relative highs. Now, when we're looking to get into sell positions, it makes logical sense for us to enter at relative highs and exit at relative lows. Now, this is just kind of common sense. So the question now becomes, how do we determine when these lows and when these highs are going to get put in, firstly? Secondly, and thirdly, what happens in this area here when price transitions from making a series of higher highs and higher lows to making a series of lower lows and lower highs, or when price shifts structure or breaks structure, or whatever acronym you want to give it. People call it MSB, people call it a BOS, people call it all kinds of different things, but essentially all it is price control of price moving from bears to bulls, or vice versa, from bulls to bears. Depends which way we're looking at it, because price can do this at the same time and push to the upside, reverse the other way. So this, as a trader that trades like myself, this is what we are most interested in, the transition. Now, why do I say that? There's a few reasons. The first reason being, when we enter from the top, we get the most amount of pips. We're able to catch the most amount of pips, which kind of leads me on to my second point, which is that we get way better risk to reward. Why do we get better risk to reward? Because our targets are much bigger. Now, the third one is not one that I can write down, but if you're able to enter from the high and you're targeting, you have a large target to the downside, maybe it's here, maybe it's here, maybe it's here, or wherever. When price hits one of your kind of interim targets, shall we say, what people would consider like a TP1, you are in a better position to hold your trade, because if price is to push up from here into like a intermediate resistance level, shall we say, you can hold your trade without getting stopped out in break even, because you're in from the high. If you were in from here, it would make more sense for you to close out once price hits your intermediate, your TP1, because there's a high chance that price pushes back up, tags you out at break even, and then continues to the downside, and you've now left the market with no profit. Yeah, you could be able to get back in here, but at the same time, I'm also able to get in again here, and now I have two entries. I have this entry here, I have this entry here. So it depends on obviously everyone's personal trading style and how you like to look at the market. But for me, it makes most sense for me to, as much as possible, get in from highs or get in from lows. So what does this look like? Now this has this reversal period, this transitional period, looks very similar a lot of the time. Now price will start by making a series of higher highs and higher lows, and it will do that until it approaches a level. Let's draw the level in a different color. Let's draw it in red. Let's draw it in yellow. Until it approaches a level that's strong enough to potentially stop it. Now when it gets to this level, it has two choices on what to do. Price can either break through the level, in which case the trend continues, the bullish trend continues, or price can respect the level. If price respects the level, then we're now setting up for a trend reversal, for price to transition between bullish price action to bearish price action. Now what does that look like, and how do we most importantly capitalize on that? So in order for price to break structure, let's do it in yellow again, we are looking for price to break on the downside of the last low. Because now, instead of making high, 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 higher low, higher low, higher low, we've now made lower low, we've now made a lower low. So price has now done the first hallmark of a bearish trend, shall we say. Now at this point here, what we're looking for is for price to make a lower high that is lower than this high here. And it's at this point now that we would look to get in and play the probability that price continues to the downside, that continues to make lower lows and lower highs towards the downside that we can then capitalize from. And price will continue to do this until it's able to find a level that's strong enough to stop it, at which point we're faced with the same decision as before. Price can either break towards the downside of the level or push towards the upside. Trend continuation or trend reversal. Now, with that being said, this doesn't necessarily always look the exact same. Price might come up, price might push up and then come back down and then come and break structure, and then that's when you get your entry or whatever it might be. Not to say that it always is picture perfect, because it's not, but broadly speaking, this is what you're looking for. You're looking for price to break structure and then to get in, at least if you're entering in a similar manner to myself. You don't necessarily have to enter here, but you can go and look at this on your charts, on whatever charts you do trade. And this is fractal, so you can look at it on the 1 minute, you can look at it on the hourly, you can look at it on the daily, you can look at it on the weekly, whatever. It's fractal, so you can look at it across all these different time frames. There's also, or rather the chart rather, is also the physical manifestation of price. It's the physical manifestation of, buyers versus sellers, which is why when you do see this reversal, you have to understand the context behind it, that it's not just a pattern forming on your chart, it's price, less people being willing and able to buy and more people being willing and able to sell. Sellers outnumbering buyers, hence why we start to see prices fall towards the downside or prices start to rise towards the upside, if that's the direction that price is moving in. Now with that being said, my free community, the Vault by Crypty Hustle, is now open. The link is in the description below. I hope to see all of you there. I hope all of you have had a great week, and I hope you all continue to have a great week. Please like, share, subscribe, comment, all that good stuff, and I have another video out for you all soon. Thank you.